Morning everyone, Scott here, just on my morning walk down here at Barangaroo Point. Beautiful morning. Now, a lot of my members actually asked me, Scott, hey, what does it mean in terms of a Trump presidency on the property market here in Australia? So I want to cover 6 really important points just for you to consider and think about. And then at the end, I'm going to give you my predictions and what this actually means for property prices here in Australia and the broader Australian economy. So first thing I want to talk about the US-China trade war. So Trump has made some really big threats to China. He has been talking about tariffs of up to 60% on Chinese goods coming into America. Now, there are already tariffs all over the world on China, particularly on steel and some other things there, but 60% tariff on all goods coming in from China into America, that ultimately won't be popular across the board for Americans because a lot of their goods, a lot of their electrical goods and so on, cars, different things, are coming in from China, and locals don't want to pay the higher prices. So it's going to be interesting to see how Donald Trump implements this policy. Does he even implement it? How much does he implement it? And what will it ultimately mean? Now, if this does come back to bite China's economy, that could have some impacts here in Australia, because the main reason that we're wealthy and rich here in Australia is because we've got a strong trading partner in China. Now, 39% of our exports go to China. We're talking energy, we're talking iron ore and other commodities, agriculture. And so if there's any hiccups in the Chinese economy, that will also come back to hurt us. Now, it'll hurt us in terms of our economic growth, but remember, if economic growth is low, what then happens to interest rates? Interest rates then need to be adjusted down so that we can have more economic growth, more money washing through the economy. So the US-China trade war, whatever happens there, if that pinches China, that in fact can actually lower interest rates, making cash flow on properties for Australian investors even more attractive than what it is today. Now, the other impact would be yes, we use the interest rates, lowering them down to stimulate the economy should some of our external trading partners suffer and not buy as many of our exports. And the other lever that we've got is immigration. So if that happens and our GDP is under pressure, expect immigration to continue at high levels. What does this mean for the property market? Lower interest rates, high immigration numbers. That's going to mean more property price growth in the short term. Now, number 2, Trump's corporate tax strategy. So Trump has said that he would drop corporate tax in the US to 15%. Now remember, it was Trump that dropped them from 28% to 21%. Now he's saying to drop them to 15%. Now this had a positive impact on business here in Australia because our corporate tax rate was 30%. And then when Trump did this, there was pressure for us to align internationally and align with the US. And we actually dropped our corporate tax rate for companies under $50 million to 25%, from 30% to 25%. Okay, so what does this tax reduction in the US ultimately mean for Australia? Well, lower tax in America will have 2 big impacts. One, it could stimulate the international economy, because this means that businesses will have more to invest in America. They'll also be able to pass on lower prices through to consumers. It's a competitive market, and this could actually lead to more consumption in America, which ultimately will help the global economy because the US is such a huge consumer of global goods. Now, in addition to that, we get a huge amount of capital from the United States. When I mean capital that comes into our country to upgrade our mines, to invest into infrastructure, to invest into business here, and also into property. And there was a lot of talk about rent to build and US companies potentially building huge apartment complexes here to rent at a lower rate. Now, will those companies now bring that capital to Australia, where the corporate tax rate for companies above 50 million is 30%, whereas they can stay in the US and potentially get 15% under Donald Trump? So capital is going to be more attracted to the US. Now, there is another impact there, because what could then happen is the Australian dollar could be devalued against the US. So our dollar could drop. This could actually stimulate more purchasing of our exports. So in the end, it could all wash out and work out, but these are some of the factors that we've got to look at. Number 3, continued strong US-Australia relations. Now, a lot of people are saying that, hey, maybe Australia will get harmed by this whole tariff thing that Donald Trump has had. But if you look back at Donald Trump's history and how he's treated Australia, he has treated us like warm and wonderful friends. Even if the political party at the time was critical of him, he has stuck by a lot of the trade agreements that we've got, and he's actually kept a very warm and friendly disposition with us Aussies. Now, I want to give you an example. So he actually put a tariff on steel, aluminium, metals, and all that type of thing. But for us Aussies, he actually did not implement it. This is back in 2016 when he first took the presidency. So that's just one example. And another example is that we had a deal with Barack Obama for him to take some of our refugees, which were offshore. And he said it's a really bad deal, but he stuck by that agreement. He took those refugees. So that's just two examples, but Trump has always had a very warm, friendly disposition with us Aussies, and that is a good thing. So if Trump puts up the tariff wall all around the US to everyone, what will he do with Australia? We're gonna have to see. We are a key strategic partner in the region here in terms of the containment strategy on China militarily and influence in this region. Well, we are a key partner there as well, so he does need to keep us happy. Number 4, a weaker Australian dollar. So all of those factors that I've discussed could lead to a weaker Australia dollar. Now, if we've got a weaker Australia dollar, it could go one of two ways. One way could be that there's going to be more demand for our exports helping our country because it's cheaper to buy Aussie commodities than what it is to get them anywhere else. And it could also increase more volume, people to buy more volume because there's a bit of a discount there buying in Aussie dollars. Now, immigration, I've already spoken about immigration. A lot of people say, hey, maybe it means that people don't want to go to the US, don't want to go to Canada, don't want to go to the UK. We'll attract more people here to Australia. Look, that's a moot point. That's a non-point. I'm not sure why people would bring that up. Australia has a target on the amount of people that we do want to bring into the country. It's not like we sort of just say, hey, whoever wants to come comes, and then there's 250,000 immigrants that year. No, we plan it and we cap it, and we've always got more demand for people to come to this country than what we accept. So that's just not going to be an issue. Now, I also want to talk about a possible shift towards conservative politics. Does the trend in America of a rejection of wokeism and actually a move to conservative side of politics, is this a trend which will flow on here in Australia? And does that mean that the Albanese and Greens coalition together, those two parties, will they be rejected at the next federal election? Will we see the Liberals take power or get more influence, or will we see the rise of independence here in Australia? Now, that is very important because the policy framework for the economy and for housing here in Australia can have a huge impact on what happens to the housing market. So we're going to have to wait and see what actually happens at the federal election next year. Will the Labor and Greens be in control, or will it be Liberal in control? What will actually happen there? We'll have to wait and see. Ultimately, guys, I want you all to remember that, hey, if we go back 100 years, property has averaged about 7% capital growth year on year, and we have been through things like World War I, World War II. Much bigger events than what we're seeing now. We've actually been through COVID, we've been through the Spanish flu, we've been through the GFC, we've been through many different things. So things are going to happen, things are going to change, but we have continued to get that long-term capital growth of 7%. So will property continue to be a great investment for Australians? Yes. We've got huge population growth in the decades to come. We've got a big constraint on the supply that we can build and add to the market every single year. And so property still needs to be on everyone's investment list. Okay, guys, if that was helpful, please like and subscribe. Follow this channel for more information on the property market and the Australian economy. Thanks, guys.